February, right? And let's go ahead and do that. We're going to turn off the waiting room. Turn off. Yes. Okay. Click OK. And let me go ahead and put on my headset on so I can stay focused on you. And let me go get my coffee. Let me go ahead and do that. Let me turn my camera off for a bit. Let me go get my coffee. Okay, Bulls versus Bears, the weekly Forex forecast. My name is Dr. Greg McLeod. So good to be with you here on this fabulous Friday. And man, this is the last Bulls versus Bears for February. We're already in 2026. 2 months into the market. We're going to go over the week coming forward, starting March. We'll see you next month in March, right? And then we're going to look at the currencies. The currencies I'm looking for the biggest moves in the market. We're going to forecast and give us maybe a blueprint and a map of how to trade the markets moving forward. So before we get started, we're going to go ahead and do share my screen with you, and also for those people who are on the, make sure I give the link to our people in the school group. Bulls versus Bears. Let me go ahead and get the title up there. Bulls versus Bears. Join live now. Right. And put this in their announcements and share my screen. Are we sharing? No, we're not. Sharing is caring. Share the entire screen. We're going to share screen 2. We'll go ahead and share that, right? So we are sharing there, and then our school community will do there, and then let's go ahead and start. Bulls versus Bears. Okay, and expand that, and reading view. Okay. All right, Bulls versus Bears presented to you by the Elite Traders University. Elite Traders University, go to www.elitetradersuniversity.com, and you can obtain our free masterclass where you can attend. You can also obtain our free ebook and other materials to help you become a professional trader. We have a special plan on mentorship where we make you a professional trader in 90 days or less using my proprietary approach. Okay. So again, welcome to Bulls versus Bears, the weekly Forex forecast. And there's a risk disclaimer on your screen to make sure you understand all the risks associated with foreign exchange trading, right? And I've been in the business for 30 years, our 30th year. And so we're excited. Been doing this, helping traders around the world become professional traders using my proprietary approach. And so would invite you to find out more. You can go ahead and go to that link. Okay, let's go ahead and get to our itinerary. And the Goldfish Blueprint is also a publication I have as well. We're going to look at the dollar index: euro, dollar, pound, dollar, Aussie dollar, dollar yen, dollar CAD, gold, silver, oil, the S&P 500, and we're going to start with the economic news and world events that could possibly shake the markets for the month of the first week in March. So let's go ahead and go to our top secret trading tool, my favorite trading tool to look at is my market heat map. Arrangement of currency pairs by percentage change. It tells us what's hopping, what's popping, what's dropping, what's not in the market. And you can access it for free by going to www.mymarketheatmap.com. And there's a site right here. You can access one of 6 powerful heat maps. Forex majors, we can see Aussie dollar, Kiwi dollar, Euro dollar in green. Green means up, red means down, gray stay away. Real simple. And there are other heat maps for commodities, for indices, as well as global stocks. Okay. And also in the front, you get free access to the economic calendar, and we have other analytics and tools as well, sentiment analysis, as well as our technical analyzer and forex calculators. Okay, I'm going to set this to high impact items. High impact items will usually drive prices and provide a context for trading the markets. So I'm going to go ahead to the show more. Okay, here we go. For Monday, March 2nd, and we're going to have some Eurozone data, France, HCLB manufacturing PMI. Let's just go to the forecast calls for a drop from 51.2 to 49.9. We also have the European, and we got the German manufacturing PMI as well coming out as well, and we have Italian data coming out. All this is coming about between in the 4 o'clock area. The 4 o'clock time frame is usually where news comes out for the Eurozone, right? There's a 4 a.m. news cycle for the Eurozone. So we'll be trading the euro, right? We'll be trading the euro then. So we have some manufacturing PMI, purchasing managers index, and purchasing managing indexes are very important because, the purchasing managers will purchase things in advance for manufacturing or other things. If they are buying a lot of stuff, that means they anticipate growth, they anticipate sales, right? So they have to plan ahead. So this is a kind of a leading indicator that if they have a positive indication that they're buying more stuff, it means that they are looking for economic strength, and this could send the euro higher. Okay, we have that Monday. We also have the U.S. data. There's a U.S. news cycle. It's an 8:30 news cycle, and we don't have any 8:30 news coming up, but we do have a 10 o'clock on Monday with the ISM manufacturing PMI, manufacturing purchasing managers index, supposed to drop slightly from 52.6 to 52.3. Again, I like trading the euro, or I would trade dollar yen, and we also have a Japanese data coming out later on. BOJ Governor Ueda's speech is a high impact item, and the yen has been getting strong lately, and so we will see if that speech will kind of impact the yen. And if we're trading dollar yen anyway, it'd be a nice additional boost. Let's go to Tuesday. We have Eurozone inflation rate year-on-year flash. 1.7 was the previous number. Forecast is 1.7. The central banks have been and other around the world usually want to go for a 2% inflation rate. At 1.7. It's below the 2% target, and so there'll probably be no need to hike interest rates, which could weigh on the euro. The euro has been hanging around that 118 handle for a while. Core inflation rate year-on-year flash PMI unchanged at 2.2, and then we have the CPI, the CPI Consumer Price Index flash supposed to rise slightly from 100.05 to 100.5, right? And then we have inflation rate month on month, as supposed to actually rise from negative 0.6 to 0.4, right? And so again, we get the European Union flag for the entire union, where we look at trading the euro. We can actually look at euro Swiss, euro dollar, euro yen, whatever one would have the best setup, right? And then we have some more inflation data out of Italy. They're looking for an uptick from 1% to 1.1%, and that's on Tuesday, March 3rd. Okay, and then what news I like trading, during the Asia session, we have some Australian data. We got the Australian flag, fund with flags here. We have GDP growth rate year on year, 2.1. No surprises there. Looks like it's going to come in at the forecast calls for unchanged gross. GDP stands for gross domestic product. This takes the economic growth of the entire country, and it's usually backward looking, but still, people use it. GDP final consumption quarter on quarter. No forecasts are given for GDP, capital expenditure, consumption, or price index. However, all of it's coming at the same time, so they're going to release all these at the same time, right? And that's going to be at 7:30 Eastern time. And so, and the Australian dollar has been extremely strong, so we expect that this data will be supporting that continued rise in the Australian dollar. And so that's going to be in play. So again, I use the people say, well, what should I trade? Why use the economic calendar to tell me what to trade? And people say, well, I don't trade the news. Well, it's like, yes, there's ways of trading the news without actually trading the actual announcement. With Pip and Run, we can trade the announcement because we have something called the predictive function that allows us to get into the market 4 or 5 bars ahead of the news and able to take advantage of it, like I did in the I did so with the Australian dollar last week, and we were able to capitalize on that. Why? Because we're able to see flows into the market beforehand, and we're able to take advantage of that. In fact, let me show you. I'll show you even an example. This was our news that we had. We had some Australian news. We're able to take a position at the blue arrow and able to take multiple positions in the upward trend using our approach. Okay. But I know some people might find news too risky, and that's completely understandable. Okay, moving right along, we have the Chinese MBS manufacturing PMI, supposed to drop from 49.3 to 49.1, and the rating dog, woof woof, manufacturing PMI, supposed to drop from 50.3 to 50.1. And see any more. Okay, there we go. I was like, well, where's the rest of the data here? Okay, but even though we don't trade the Chinese currency, I always tell people we can always trade the Australian dollar or New Zealand dollar are proxies for the Chinese currency, and so we can get an extra bump going into the 8:30 and 8:45 when this news comes out. Okay, so we might get an exaggerated move in Aussie because we have so much Aussie data there. So the Aussie New Zealand is what I would even trade. Even the Aussie Kiwi is something that I would like to trade as well during this time. And we'll look at those charts on in our upcoming segment. Okay, Wednesday we have Japanese consumer price confidence 38.2. We have a lot of data, and so I'll just look at the flags. And I'm not really so much looking at the number. I'm just looking at the activity. I want to be in something where there's activity, and so we do have lots of euro data coming out, and we also have the ADP employment change, which is usually a precursor to non-farm payroll. Employment data is very important to an economy, whether people have jobs so they can buy stuff. If they buy stuff, it makes the economy stronger. If they don't have jobs and they don't buy stuff, and then the economy falters. So we see that this number is going to be very important. They're predicting a rise from 22,000 to 45,000, and if that increase does happen, it should be good for. It might actually be good for if we trade the euro versus the U.S. dollar. Could be good for the euro. The dollar usually is a fear-based move where we're running to the U.S. dollar, buying bonds. In order to buy bonds, you need U.S. dollars. And so the dollar demand increases when there's bad news, right? Unlike other countries where good economic data makes their currency go up, in some cases, good economic data makes the dollar go down. And a lot of people don't understand that. They'll go ahead and they'll buy dollar Swiss on good data and then lose money. Right. And that's the subtleties in the economic market is why you need a mentor, why you need coaching of someone who's been around in the market for a while that can give you these nuances, because sometimes common sense and traditional understanding is not how the market really works. Okay. So you want to watch this data. Positive data is usually good for the euro because the euro is considered the anti-dollar. And then we have Wednesday, we have Australian balance of trade. coming up too. So that's going to be a good one. Thursday, we have some Swiss employment data, 3.2, 3.1. Sometimes that data is not doesn't move the currency that much because the interest rates are so low in Switzerland. But they don't like having a really strong currency because a high currency rate makes their exports more expensive. And when people don't buy expensive stuff, then it really impacts economic growth. And then we have some speeches out of the Eurozone. Initial jobless claims supposed to rise from 212 to 216. And then we have the big one that's going to come up is the retail sales. All these are big, but this is bigger because consumer sales makes up about 80% of the economy. Having growing retail sales is good for the economy. However, we see that the forecast call for a negative number. Now, the bean counters in Washington, D.C. can be wrong. When they are wrong, and with the actual number, if the actual number is higher than the predicted number, then that would be very, dollar bearish, but maybe euro positive, right? And so, they say 0 was the previous number, negative 0.2 is the forecast. Let's say we get like a 1% or a 2% or a 0.5. That's better than expected. Well, then we'll probably see the dollar actually go down on the better number. However, this comes out like negative, super negative, then we could see the dollar actually go up, right? Could start rallying. So retail sales, that's the month-on-month number, right? Which is our short-term view of retail sales. And there's our year-on-year number. 2.4% was the previous number. We're expecting a drop to 2%. Again, the surprise number, a difference between the actual and the forecast would cause a bigger currency move, right? Because the market's a discounting mechanism. It's going to price in the news ahead of time, right? Unemployment rate is supposed to remain steady at 4.3%. Average earnings month on month supposed to drop from 0.4 to 0.3. Non-farm payrolls. Oh, we'll get non-farm payrolls on Friday again. Okay, this is more like it. We used to have we were having like non-farm payroll on Wednesdays and stuff like that. But I guess we're probably catching up because of the government shutdown. And I think this is the first regular non-farm payroll, and they're expecting a drop from 130,000 to 60,000 for the month of January. Remember, it's backward looking because February is not done yet. We'll get the February number in March. And then we have some Canada data, the IV PMI, which actually really does move dollar CAD a lot. The CAD, if you want to find a trade at 10 o'clock, the Canadian dollar around this time, IV PMI is pretty important. Purchasing Managers Index. Okay, so we went through the fundamentals. Let's go to the let's go to the charts. Let's hit the charts, right? And let's go ahead and okay, I'm gonna use TradingView for our charting. Very clear, and if you want, I can get you the link to that. And okay, there we go. Make sure. Let me turn on our chat box. End of the week time file. Yeah, time does fly. Time does has flies. Hey, Giant Giffy is there. Sean is on YouTube. You got my YouTube people. Thank you so much for attending. And we're going to change our no. And let's go to do I have something off? Bounce House, Elliott Tick. Make a copy. No. Oh, we want just one, right? And we want to clear our stuff and go to a higher time frame. And we're gonna clear all indicators. We're gonna clear all drawings, right? Okay, I'm gonna leave the moving averages on there, and then I'm gonna save this as ooh. Okay. Anyway, we got rid of all that. All right. All right. So let's start. We're going to start with the dollar index. The U.S. dollar index is the basket of currency pairs basket of currencies versus the U.S. dollar, and we're going to go our monthly. And you see that our monthly dollar index. We're basically in a big giant range. We do have we had this uptrend, right? But we're hitting support. This is a support area here in this 96.38 area, which is quite interesting for the U.S. dollar. Multiple bottoms and a demand zone right in this area here. We've been hitting around here for a while, for months. We have not gone anywhere. We haven't gone. Basically, we're confined in a very tight range. We have a topward resistance, and we have our support zone, right? And we're really like stuck in a box. When we're stuck in a box, it can give some currencies a chance to catch up and move higher, right? And so we drop it down to a weekly chart. We can see lots of explorations, but unable to close below 96.72, right? This is bullish rejection of the bears. Every time the bears have pushed down, and what's driving the dollar is tariff talk, right? With the Supreme Court getting rid of the tariffs or deeming them illegal or unconstitutional, whatever. Just the way he did it, and now he's basically saying, "Hey, we the powers that he can use to employ tariffs allow the administration to add more tariffs greater than he's already doing." And so those countries are not going to renegotiate for a worse deal. They have the better deal. Trump gave them a better deal under the rules he wasn't supposed to use, knowing that when those rules are overturned, the countries are not going to say, "Oh yeah, Supreme Court's overturned it. We want our money back." It's like, no, we're just going to make them worse. It's like, no, we don't, because under the first rule, you could only apply tariffs on certain levels. Now, with these new powers, or the powers that he had basically kept in his back pocket, he can make the tariffs even worse. So once the news catches up, we get past the propaganda, people are going to realize that, hey, this is not that bad. And then we can see the dollar would continue. What I'm saying, long story short, or long story longer, is that we could see a further decline in the dollar. We could break this area once that news gets through to Wall Street, that it's actually nothing's going to change, and this continued down move will continue. But until then, we're going to move sideways. The jury's still out, and that would give some strength to the dollar. So we go to a daily, and we can see, we'll probably top out in that 98 to 99 here. The 200 moving average here is at 99.08, and we can put a fib on that to actually see how far this could go, right? And we could probably 98, 92 would probably be our top resistance, right? Even the old supply zones right there. So bulls versus bears, I would be I'm slightly bullish on the. Okay, so let's go ahead and pop that in there. Okay, let's move on. Let's go down to a 4-hour chart. You can see it's just not moving anywhere. Let's go right to the euro, the anti-dollar. And the anti-dollar is doing the same thing, right? It's kind of creeping along, starting from our monthly chart. But we can see that it's making a little bit more headway. 118.35, 118.20. We have been moving on up, like George and Wheezy, right? Moving on up, right? Higher highs and higher lows. Our structure, we hit hitting this low around the 95 area, and then we continue to climb this wall, right? Very jaggedy price action, very jagged, pull back, and then we hit a high about 120.81. But the last weeks, 1, 2, 3 weeks, we have been confined into a very small range, very small area where price has not been able to get very far. This low volatility usually precedes high volatility, right? So we are seeing this small, usually after these small confined moves, we get a breakout, right? And the breakout is usually in the direction of the trend. So we got this tight consolidation, right? While they're going to break out south side or north side. Let's go to a daily chart, and you can see that we have not. I might even go maybe a little bit lighter on that. Yeah. Okay. Yeah. So we're just confined in this box, and basically we're looking for a breakout either south side or north side. Where that might be if we get an outside break, and we got to clear. This. We're a real tight range. We're down. Really, the range is compressed like that, right? Because this is daily, 1 day, 2 day, 3 day, 4 day, 5 day, 6 day, 7 day. We're bound to get a breakout. This is 1, 2, 3, 4, 5, 6, 7, and something called an NR7 and narrow range bar, 7 bar. Usually we break out at 7 bar to 9 bar. You get a bar breakout, right? From when you get that consecutive bars before a breakout. So think of like shaking up a Coca-Cola bottle, right, and then opening it up. It's gonna pop up either south side or north side, where we get a south side breakout. Yeah, so we can see a breakout from this consolidation. The higher that consolidation is usually the distance of the breakout, right? So we'll see it better on a 4-hour, right? A 4-hour chart. We have very tight consolidation, and we have no closes outside that, right? And that's why I would set an alarm, right? I would set an alarm at like 118.31. We can put an alarm there. And I can put an alarm, maybe, this is, let me go back to that for daily, and let me squeeze it a little bit tighter, right? You go at that 4-hour, right? So you can see, and then I'll put an alert down below in case we got a breakout there, just in case, when you start looking at other currency pairs, what happens is you forget. And then all of a sudden you go, oh yeah, I saw that, and I didn't do anything with it, right? So this will send me an email. Will either send me an email or will it'll send an email or a text. It'll send an email, a text, or chime my computer, which is a pretty cool feature, right? And let me go ahead and give you the link. If you are interested in getting TradingView, you can click the link here in the chat box, and you get $15 when you click my link. You'll get $15, right? Sean says NFP is so much better on Friday instead of hump day. Yeah, I was going nuts by going, you've been doing this for 30 years. Non-farm payroll was always on a Friday, and you put it on Wednesday. It's just I think finally someone said something about it. 2-hour chart, 1-hour chart. The trend's your friend, and I think if we did get a breakout, we would see, we could see this old high from February 10th come back into play. Right, 119.24, right? But I'm given the dollar, what the dollar is doing, and no talk about the tariffs, I'm thinking we go down back down to 117.40, and maybe even 117 the figure, right? So I am constructed. I am torn. I'm leaning more on the bear side for the euro. Okay. So let's go down even further. This, most of our trades, many of you trade the euro. It's and it's it was kind of challenging to trade this week. I'm going to create a scalping map for you. Remove all drawings, right? Yeah, okay. So to create a scalping map, what I'll usually do is I start with the highest point in price that we had recently, which was back on December or January 29th. I'll take a fib from that bottom to that low that we had around February 20th for the month, right? And look that we so we actually have a bullish scenario, but the scalping map is basically this. I look to trade from Fibonacci to Fibonacci, right? So once you put the Fibonacci on your higher time frame. In fact, let me remove this. I'm sorry. Let me remove this. Remove all drawings. Okay. I want to go out to my daily. Right. And actually, I would draw the scalping map. Since we are moving higher highs and higher lows, I would line these up on the low and the high, right? And then drop down to our 5 minute, maybe a scalping chart. See, now we've taken our higher time frame fibs on our lower time frame chart, and you can look at where we are in relation to price, so you can see that we're really far away from any fibs, right? We're like extremely far away from any of our Fibonacci's, because we're in a range, right? So we would like to see a push to 116.51, right? And our high, there's really nothing there where we can really grip onto. 4 hour chart might be a little bit better for our scalping map from the low to the high, and then that's what I had before, right? And then trade between the lines, right? So we get a break above 118.29. Look for a move to 118.86, okay? And that represents a move of 59 pips. So basically, 59. If you got 59 pip range, and if you can capture 25% of that, right? You can capture a fourth of that, and you can scalp 10, 12 pips out of that multiple times in that scalping range, right? If this 50% retracement acts as resistance, we can also scalp. We can scalp from here to here, right? We can, there's 63 pips between the 61.8% Fibo and the 50% Fibo. So you're just scalping between Fibos, looking to looking at your smaller time frames, so it can maybe 5 minute, and you can say, okay, look, we've got resistance here, maybe a topping pattern, and if we hit that line and reject it multiple times, we can sell against this for a target back down to this Fibonacci, right? Or we can even scalp into that. If we go to 1 minute, there's probably not a lot of room up there, but we've got a double top there. Maybe we can scalp, from 118.23 to 117.67 represents about a little under like 56 pips. Is that right? 56 pips that we could scalp for that. Either take one position for that, or with a stop above the high using proper risk management, or you can actually scalp in 10 pip increments, getting in and getting out repeatedly. But this is your range that you're looking to scalp in between the 1829 to the 1768, right? And you can apply this to any of the charts I'm going to be showing you later on. Okay, let's go across the pond to the pound, go to the monthly chart, and we can see that and remove our drawings there. And let's go to that the pound, and we can see lots of consolidation, maybe maybe inverted head and shoulders. But running against resistance with a 200 simple moving average, usually when price rallies to that area, there is rejection. We are in a short-term uptrend with a long-term bearish decline from that high of 212, right? And we broke numerous trend lines, but we have right there, that's our daily trend line across the top of that last wick that we had back in where was that? That was January 1st, 2026, right? We hit a high of the neighborhood of 1.3889. We're making higher highs and higher lows, so we expect for price to continue to rally, but it doesn't really have a lot of room. Let's go to a weekly chart, and we're already look like we're turning down ahead of that, right? So maybe a double top. And if we were taking the bearish Fibonacci's from here to here to the low, we're at the 88.6% Fibo, and we're at the 786, and the next Fibonacci after that is a 618 at 128.25. So we could scalp from using this as a backstop, using the 786 as a backstop. We could probably look at a move from 34.90 to 28.18, and that's like a little over 500 pips there, right? Looking at the weekly, bringing it down to like a 4-hour, right? You can see that the 200 simple moving average is capping any type of increase there, and we have this down intermediate downtrend from the top of 1.3835, kind of what we call a descending triangle, right? Where the kiss gap price, we're making lower highs but the same lows. So even though we do have a double bottom and it looks bullish, we might the bullishness might be capped by the 200 and this upper trend line, and so we could see a break south, right? And we could go, but there's lots of empty space there. I mean, there are intermediate support levels along the way. You look at this intermediate support, and those could be targets as well. We just take the wicks, the lower wicks, and we can see that maybe our next target's like 133.32, which is still, about 70 pips away. So we have multiple trades to the south side, right? We've made lower highs and lower lows. We just need to make a lower low, look for a break of 34.38, and I would put, I'll just go ahead and put an alarm there. And that way, I'm conscious that this is, hey, I want to take this short, and so I'm bearish. I am bearish the pound versus U.S. dollar, right? And we can see again, we might get a little lift on Monday. You might get some people taking the bait for a double bottom. We might rally. We could rally a good little ways here, right? We could rally 30, 40 pips to the 200. But after that rally finishes, then we'll probably turn around and keep going south. So we might not get a break straight through. Sometimes it takes a little bit of a little oomph for the market to, we might go up first, to sucker people in, and then, market maker trap, liquidity sweep, and take it even higher, and then drop it, right? So the initial drop might be a bait and switch too. So be careful of the traps around this area. Okay, let's go ahead and go to my favorite currency pair, the Australian dollar. And you'll see from this monthly chart, we can see that we have made quite a big gains. But we're coming up on the 200 moving average again. That's an area of support and resistance that traders look at and see. But on this monthly chart, it's a while. It's like 73.69. We're at 71. That's like 250 pips away. 250 pips away is we could probably find some good long scalping opportunities in the direction of the trend. We got next the moving average. They call the Steve Allen moving average. Steve Allen is one of our students, and he has been with me for quite some time. And he loves that nest of moving averages, and I do too. I add them to my chart, so I have for those of you who are watching, I've got a 5, an 8, and a 13. So those are Fibonacci numbers, 5, 8, and 13. But then I have my pip and run 200 moving average on. I have on all my charts and all time frames. Get a little pip and run coffee here to wet my throat there. And you can see that we went from a consolidation, a very tight consolidation, but went on for a long while, for months. And I'm looking for my shapes. Yeah, there's my shape. So we had this rectangle consolidation for weeks. But when we finally got the break on that Aussie news, it's just been, and the break happened at 666, right? 6663, right? Yeah, break above that. And then now we're at 71. So 500 pip breakout, right? We go from low volatility to high volatility, this expansion, a breakout. And notice how the moving averages are spreading out, showing that we have increased momentum. And basically, this is a train making higher highs and higher lows. And we do have some levels of resistance along the way that we can quickly draw in and target. We're currently at one, so this is great because if we break this and go to the next one, which is at 73,900, that's like an air gap. I mean, we go from 71.47 to 73. That's 200 pips, right? So I am very bullish. I'm not even looking at the lower time frames yet. But so you look at a daily. You know, we're finding some resistance, but we get a pull back into the value zone, right? The gap of space between the moving average between the 13 and the 8. Well, you know, we're looking for momentum to break us out, you know, above this area, right? I'm actually going to put an alarm there. And when we cross there, I put the alarm right on the line, and I got a little clock right there. That's a new little feature there. I'm looking for price to actually to break higher, and it could be a good long term trade, right? Long term for me, probably like a couple of hours, but I mean, a couple of days of movement, sideways consolidation. You buy in quiet times, sell in wild times, right? So when it's quiet, that's what the smart money is doing. They accumulate positions in that quiet period, building positions, building longs in the direction of the trend. On every pullback is a discount. And once they stock up, boom, they start selling into the rallies. When the rally go up, when the rallies take the price higher, they accumulate a reserve or a inventory of they create an inventory, right? And now they're selling their inventory, right? Can you imagine 2019 and you go to Costco and you buy all the toilet paper 2019, you're stocking up on toilet paper, and people are looking, why do you have all this toilet paper? You'll see, right? So you're stocking up. The people don't know why. Why are you buying it? Are you crapping a lot? Are you sick? Why are you buying so much toilet paper? You're buying it 2019, why do you need toilet paper? Why are you buying truckloads of toilet paper? And then COVID strikes. And then there's a raid on the supermarkets, and there's no toilet paper to be found. Guess who has all the toilet paper? Guess who's selling that stuff for like $10 a pack, $20 a pack, right? Right? Because what? It becomes an auction. This price represents how much people are going to pay for what you bought in 2019 so cheap, right? You were delivering, Adrian, you were delivering toilet paper. I was delivering toilet. And how much was it, Adrian? I bet you that stuff wasn't cheap, right? Because when you buy it when it's low, you can sell it when it's high. Now you can buy high, and I've done that. You can buy high and sell higher, but you run the risk of being this guy right here, right? And I've been that guy. Right there. Greg. You are the wick. You buy here, and the price drops. And now you're sad, right? You bought. So this is me. All right, it's going higher. Buy on green. Stuck. Finally comes back out. Oh man, I'm gonna get out of here, right? And get out, right? And then it keeps going, right? But then other people come in and go, oh, bargain. They're buying. Ooh. Buying. Boom, price. And I can get out, right? So you want to buy in, smart is to buy cheap, buy low, sell high. Buy low, sell high, right? So you want to get that discount, right? He's there. John says he certainly was flush in the market, right? That wasn't a crappy joke. That was a good one. All right. I'm flush. Let's go. All right. Next currency. We went the euro, we went the pound, we went the Aussie. Let's go to dollar yen. Dollar yen is such a puzzle. My goodness, when it was rocking and rolling, Bank of Japan was like, oh, this is what I was gonna name my kids. One of those girls would be named Yenny. Who do I turn to? 85309. Yenny. Yen. I love the yen, right? But when it starts getting funky, look at that. That doji represents lots of funk. Indecision. Doji means indecision. Doji. That Doja Cat. Doji. Equals indecision. Equals range. Equals channel. Right? So we get this indecision, and it's the cross, right? The decisions made at the cross. Are you gonna be saved or are you gonna go to hell? We don't know. It's indecision, right? And you can draw lines across the top of a doji because the middle part is the range, right? So let's walk it down. Watch this unfold. The magic doji. Oh, look at that. Tight range. We went from a week, we went to a month, 4 weeks, 1, 2, 3, 4. That's the doji right here. That's that monthly doji, 4 weeks in a month right there, right? Let's go out to a daily. Oh, look at that. Let's look at that. 4-hour chart. More range, right? All this is inside of this, right? That's the doji for the month. This is all February. This is February right here, right? This is 4 weeks in February, right? This is 28 days or 20 something days in February, right? They look at the hourlies, right? 4 hours. How many? There's 6 4-hour candles, 6 times 30 is 180, roughly 180 candles. We're still inside the month. We haven't gone anywhere, right? We probably could have like bought support, sold resistance, bought support, sold resistance, right? So there's a ranging. We could have done something there, right? The range was 52.30, 52.23 on the low side to a high of 57. I'm not going to do math right now. It's too early. West Coast time. It is it's 530, 500 and 556 pips from the top to the bottom, right? So you could have traded this top to the bottom, right? But we haven't gone anywhere as far as that's our trend. It broke down, right? You know, and if we were using our predictive function, right, we could have, in a range, we could have taken this short, taken this long, taken this short, taken this long, bounce around like Pong, right? What happens next? Well, it's still inside the doji, right? We need the next candle, which is going to be March 1st. March 1st will tell us to get out of this range, right? How are we going to get out of it? Well, we got to get north of 58.22, right? Does it make sense? Let me know in the chat box. Give me some 777s in the chat box, lucky sevens. If you're getting it. Makes sense. Right. This is how I'm thinking. This is how I approach the market. Right. I'm looking at this I'm looking at this range, right? I'm not in a trend, but there's a trend within the range, right? And then there's ranges within the trend, right? Even here, there are ranges within the trend. So this thing, you know, so it's not, you know, looks super strong here and that represents 4 hours. Each candle is 4 hours. 6 of these candles is a day. You can spend a day and not even see that you're in a trend, right? And you won't know until this breaks to a new high, right? So we were in a range here for like 5 days. I mean, not 5 days, but for 20 hours for a day, right? At the end of the day, it broke out. But for the rest of the day, you sat there in nothingness, right? And that's what makes it kind of frustrating, especially if you're a scalper, right? But let's go back to it. Let's go to a 1 hour chart, right? And how many hours is what? 1,440 hours, 1,440 in a day. Awesome. Sean is finding it clear and easy. Cool. Yeah. So here is all these candles, right? And that's one month of candles. And so we can see this. you catch that. Look at that. That's kind of a double top. 3, 4, 5. A, B, see you later, right? Right. And see, we're covering with vertical candles gapping, right? Very fast move, nice scalping. This is rough. This is tough sledding here, right? But here we're undecided. If we look at how it came in, the way price came in, it came in to the range as an uptrend, right? So it went uptrend, range. Well, usually when we go from trend into range, we go to breakout in the direction of the trend, a resumption, right? Rather like here, small body, I mean, you could have sometimes you have a drop, but for the most part, right, we've seen there's trends where we have seen price move sideways and drop, right? But we are making higher highs, narrow lows. We expect, so I am slightly bullish on the dollar yen, but we need a break, out of these boxes, right? We need to get above 56.85. That's our last high there, and ultimately, if we can get above 57.80, we'll be back. And we got there's a whole supply zone right there, but we just got that's the next that'll be the next obstacle. I mean, we've got all that ahead of us. It started. See, it's the seed of that started here, right? All that congestion will project into the future, right? So this is like, you got traumatized as a kid, and maybe your dad beat you up or something, and or you're got some type of trauma, right? And then and it carries right into the future. That trauma is still there. So when price rallies to this area, that trauma, it'll hit that trauma, and will start acting up, and it'll go, okay, oh, right. And so if you're trading a trend, you want to exit until this is gets taken care of, right? It goes to therapy, and then it breaks out, right? So this is the when it gets past the trauma, right? Well, then I would put an alarm right there. It's like, you know what? Call me when you're done with your therapy, and we'll resume our uptrend, right? 59.78, right? Been relationships like that. It's like, you're going through something. I'll see you later. Come back when you've done, right? Because this is sitting back there, and the past price has a memory. You got to remember that price has a memory, and so traumas in the past. That's why you have to look at multiple months and years of data, because price has a memory, right? It's more difficult with gold because we have not been over 5,000 on gold, but you can see the memory. But look back here, 1990. Price has a memory. This was 36 years ago. 36 years ago, we were here. And what happened 36 years ago? 1990, we hit that area and dropped. Technically, they explain it that there are orders here, and maybe Greg bought here, and Greg stayed in this position for 36 years, which is probably not the case. But then Greg will say, if this thing ever gets back to 160 again, 158, 160, if it ever gets back here again, please, God, please make it come back to 160 so I can get out of this trade. I'll sell it and get out of it. I'll never do it again. Okay. So think of old highs like that. People are stuck there. So when price gets here again, they go, oh my God. And they start selling to get out, right? All the guys that got in here, like I said, I don't think they're here for 36 years. They could be, right? You never know. They've been in this position for so long, endured all of this, and then price gets back up here, and then the selling starts. That's what old resistance is. That's how it works, right? People have a memory, and they have orders, and they hope prices come back. And when it comes back to their old price, they start selling, right? And then people actually put sell orders. They put sell limits at this waiting, right? And then price drops, right? Now, there's only so many, there's a finite amount of sell orders here, right? There's only a finite. That's why supply and demand zones work the way they do, right? When I draw that, and this is all these guys holding, but what happens is these levels are granular. there may be 1 million there and 500,000 there, and all these are different people, different, right? And as price penetrates these levels, they start disappearing, right? They start to disappear, right? Every time it hits up, those orders get, and after a while, those orders are gone, right? Right. After they shrink, they go from here to here, 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 and here, and that's it. The next time price comes here, people will have, a few people have some sellers here, but there's nowhere, all the sellers are gone, right? All the sellers were taken out here. Price comes up again for a third time, but it's scared. It's got PTSD, right? It's like going, oh man, we're back at 158 again. Last time we were here, it fell. I don't think it's going to go up there, right? And then somebody says, oh, whatever, push ahead. And they'll start buying into it and pushing it up. And they realize there's no sellers here. And they'll try, and then they'll bust right through, and there's nothing here to the next level. The next level is here at 158.25. Is that it? So we're hanging out here at why are the numbers in reverse? Oh, you know why? Okay, settings, canvas. I gotta go, maybe I go 12. Okay. Now, so I go here, it says 160. And there, 161. Okay. All right. So okay. So we need to get past there at 164. There's no one there. Well, I mean, this guy's the 1986. I'm sure he's either dead or retired. Whoever has orders here waiting, right? And so there might not be anything left there, right? They might look left and see, oh, there's a bunch of orders here, but they're actually they left back in 2004, and so price may just bust through, right? And now we've got all this, right? This is a meltdown, right? If we break this and hit these are gaps. Big long vertical moves down. This is a currency crisis here, right? Where the yen got super strong, right? We break that and we break this last one right here. There's nothing here. We may start, the dollar yen could start moving super fast, right? We're very close to something critical in Japan, right? And they know it. That's why they've been trying to, it's been strengthening. The yen's been strengthening, trying to slow this up, right? They can slow this up, but the moment we break here and break here, there's nothing here. There's nothing. We won't have anything. I mean, we do have, see, this low here, 76.96. This is a major. This could be the next black swan meltdown in the financial markets. The Japanese economy is a ticking time bomb with 200% debt to GDP, right? Even though, I mean, they have a wonderful country. Don't get me wrong, beautiful people, wonderful food, great culture, but they are an accelerated U.S. system. After we dropped 2 atomic bombs on them and rebuilt their economy, we rebuilt their economy like ours, right? Based on debt accumulation, and we made it better and faster. So they're like an accelerated version of the United States, right? They're like an accelerated version of the United States. Because we rebuilt their infrastructure, we rebuilt everything better than when we had it. And so they are farther along on the curve than we are, which, when, the devaluation, because the yen is devaluating, right? They're devaluing their currency in order to export, to have more exports. And that's what we're going into, that where people say, well, the dollar is getting weaker. Initially, it's going to be good. Having a weak currency and selling more John Deere tractors overseas is going to be great, right? However, you don't see many Japanese tourists here in the United States. They can't afford to come here, right? Because their currency is too weak, and so we're going to be stuck here with a weak currency, right? Unless we're diversifying to gold, silver, or some other, or Bitcoin, or some other asset, which that's what they do, right? You know, the Japanese women, the Watanabe, Mrs. Watanabe complex, where Japanese women are traders because they're basically offsetting the weakness of the yen by trading, and that's why the yen trade is so important. And Japanese women are very, very important. Uh, and then people say, yeah, there's more Japanese women traders than there are male traders, which is I didn't know that. Um, and so they're going to offset. And when this thing blows, you're going to see this huge rally because there's nothing stopping it, right? There's resistance here, 199, right? And we've got some stair steps, and then 213, 214, and it'll start getting mad. What do you do then? And then we're basically, we thought we're like, this is a cup, and if you look at this pattern, it's a cup and handle, we create the saucer bottom, and then we start breaking up and filling to the other side, right? So all this drop that we had, the rule of symmetry, we'll see on the other side. And I'm spending a lot of time on this because I don't know why. I mean, it seems like it's like the universe is like giving us a little it's coming into fruition where we're very close to the levels which normally we've kept. They basically try to keep the currency manipulation to keep the yen in this range. It bought them time from the collapse in 96 when we had the big long-term capital meltdown. This basically, they managed to control by keeping a range. And the manipulation that governments have done to gold, to silver, to other things, they try to keep it in the range by stalling it out, of doing different manipulations. JP Morgan, they got $935 million penalty for manipulating the markets for 10 years. So this is engineered to keep them, to buy them time, right? Basically, like credit card millionaire, take one credit card, pay off the other one, use a credit card, pay off another one. But eventually, all those credit cards become due. And when they do, well, then now you've got insolvency, defaults, and things like that go on, right? You'll see the same thing that's happened here, and you'll see the dollar really, really blow up against the Japanese yen, which is we can see this, right? Could be a generational buy, long dollar yen, and then you're going to earn interest. They pay, the interest rate differential. It's 0.1 there, and it's 4 something here. So you get 3% holding dollar yen, right? I'm not a recommendation, but we're in that. Oh yeah, I wanted to show you. Let's see if I have a swap account. Let me show you what that actually looks like. Log in a trade account and blah blah blah. Ooh, yeah. All right. Let me see. Log in. File. Log into trade account. I'll show you what swap looks like. A lot of people, they don't understand that. But let's see. Okay. So this account. Okay. So this is a one position. I got one lot, one standard lot of the dollar yen, right, at 155.84. And so I earned, so that's basically I'm saying, it's saying I have $100,000 worth of Japanese yen, right? $100,000 worth of Japanese yen. And when I control $100,000 in Japanese yen, I get daily interest, right? So I put the position on February 4th. So almost a full month, right? February 4th, beginning of the month. I earned $148.65 on $100,000 of dollar yen. Swap is the interest, overnight interest. You get daily interest. You get interest Monday, Tuesday at 5 p.m. Eastern time. When you hold a position, if you're long the currency with the higher interest rate, you get paid interest. So I got paid interest every day, not Saturday, not Sunday, but you get triple interest on Wednesday. So every Wednesday was triple. And so that was $148.65 for doing nothing but holding it, right? And I could withdraw that. And meanwhile, I'm also up $151 in my trade. So between the swap interest and the profit, it's $300, and it's fluctuating. That's right, because today is Friday, right? So the swap interest is the interest, since the United States Central Bank has a higher interest rate than Japan. You get paid a swap, and you can find out your swap tables by going into your platform and going and you can actually go here and you can right click it and look at specification. You click specification, and then it tells you your margin and a lot of different things about the currency, right? But you can see swap long, $9.22 for interest per day, right? $9.22. That's a lot. $9, and then it's triple on Wednesday, right? So it's really 7 days of interest. So you just take a calculator like that. You know, you take like 9.22 times 7, right? What really is that? 9.22 times 7, 9.22 times 7, 64, right? And I didn't really do it the full because I started on the 4th, so I missed some of it. I would have probably had more per week. So if I held it for a full month, then $258 in interest on $100,000 notional. Okay, but you don't, when you put up when you trade $100,000 in currency, you're not putting up $100,000. My margin, I put up $1,000 in margin. So I put up $1,000 in margin to get access to interest on $100,000 in currency, right? Because $258 divided by, that's, on $1,000, that's a 25%, 25% monthly return, right? If you, based on the amount of money that you put in, but you're really giving credit for 100,000, right? So you take 100,000 at 3%, right? So it's $3,000 for the year, right? But you're getting what, $258 times 12, right? 3,096, right? Comes out about the same, right? So because the differential, we have 4% here in the US and like 0.1% differential in Japan. So you're earning this much interest, but you're only putting up $1,000 in margin, right? As opposed to get this in a bank, I would have to put $100,000 in the bank to get that interest. But with leveraged Forex, I only had to put up $1,000 to get the buying power of $100,000. So that's the math behind that, right? Which is pretty powerful when you have something like that. What do you think about that, guys? Little bit of math there, right? So can you imagine people are selling the yen and buying the dollar, collecting this high interest, right? But since I continue to devalue their currency, which is helpful for exports, but the figures show that Japan cannot export their way out of their current predicament, and it's it's really interesting because it's not like they're like some kind of South American country where there is disorder and lots of poverty and crime and infrastructure falling down. They look good. Japan looks wonderful, and you would never think that there's a time bomb financially going on at all, right? Anyway, what I just told you is worth a lot of money, right? Both on being able to take advantage of the that swap interest, right? Being able to earn regular, and let's say you had 3 or 4 lots of at $100,000 each, right? Well, then you're collecting maybe $1,000 a month, right? 600, 700, like $600-700 a month in interest. While this thing is moving in an upward direction, you're also getting the benefit of the appreciation of the U.S. dollar over time, right? Again, this is not a trade recommendation, but it's just something to think about. This is my 2 pips worth. We can go on with with gold. Let's jump over to gold. Oh, dollar CAD. Well, the longs are on the dollar, and which is interesting. What's going on with dollar CAD? Again, it also has been moving sideways for a long time, and we have not had a breakout. Our monthly, I mean, just nothing, right? Move all drawings, and we haven't really gone anywhere, right? Which on one hand, if you're a trend trader, this is like the worst market in the entire world. Because you want to break out, you want if you went long July 1st, 2025, you are still in it and you have not lost much, but you haven't made anything either, right? So people say, well, scalping is well, you know what? You scalp this versus trending and holding it. A scalper would have made more money than a trend follower. You guys follow that? And we just the levels that we look at would just be playing support and resistance, buying at 135.19 and looking for a move to higher back to the no, right now we're at what's going on here? Let me go back to that weekly. Let me shrink this up. Our range is tight. We're 4-hour chart. Yeah. Right. We're just trading between a low of 3,500, the round number, and the high of 3,720. And we'll look like we're going to head back toward that 3,521 area. So actually, dollar CAD, I am bearish dollar CAD. And you could put a similar scalping map, but it's pretty. I mean, that's pretty simple right there, right? You can just draw resistance, draw support. You'd have a demand zone here, right? And you have your sell zone here, right? Which we're already in, right? We're already in a sell, already departed. The train's departed the station for a sell zone, right? And we could, probably even, scalp that short. Okay. Now let's go to gold. Gold is such an interesting, it's been after this wonderful run that we had here, going back to our monthly chart. I mean, monthly chart still, if you look at monthly, we have not been to this area ever. There's no previous highs. There's no historical data. We went from low volatility to high volatility. This is a tremendous parabolic chart, right? And they always say that parabolic charts usually collapse, right? But you got to think of what would happen. How could gold? What are the circumstances where gold could collapse? The dollar gets extremely strong. Interest rate means in order for the dollar to get strong, you have to raise interest rates. and then the interest rates to go up, you would have to have inflation, but you would have this, but the paradox here is that people run to gold for an inflation hedge. Little do they know that when you have inflation, the value of the dollar goes up because of a rise in interest rates, right? So we can't really don't play the fundamentals. Let's look at the technicals, right? And we can see we have one red candle, lots of green. And this was a very weekly, 4 or 5 days of week. Let me have a breakout. We have a breakout. A decision was made today. We got over the high of the doji. The high of the doji is 50.99, and we got a break above the doji of the cross, right? That was the range, and we broke above that range, right? That was the range we were in. We just made a new high, and so the trend has resumed, right, out of that box that we had. We go back to a daily chart, and you can see that range box barely got out of it, right? This was a whole, several hours we were in that box, right? 4-hour chart. We had this consolidation that we were in. I'm gonna remove this. Okay. We're in this very tight consolidation. And now we just eked over the top, right? And they could be a trap, You really want to see several candles break to really confirm that we're out of the woods, right? Or this could be an extreme move, and we could, with the dollar strengthening, we could snap back into this. This could be what we call a bull trap, right? And like here, right? We have this spike up, smack down. Then you have a little spike up and drop back down. And sometimes we can get big spike ups, right? And people, just to lure the bulls into a trade. Oh, look, buy the breakout, above the high. And then boom, your name's on the wick, right? Your name, it's tagged. Like they used to have, if you go to like the carnivals, they would put your name, engrave your name on a grain of rice, right? You ever seen that? And your name is on that, on that wick. So your name's on the wick. You bought buying the breakout, and then it snaps back down, and now we're back in the range, right? So I love breakouts. I just don't. I like waiting for a break and retest. If you guys have heard that term, a break and retest, where price will break out and retest. So I like to see a breakout, and maybe see a retest of the market, retest the price, a re-entry, return to the scene of the crime is what I call it, right? So if we get a break and retest, we could go higher, right? But this is a good sign, though. I mean, it could be a double top too. It could be a trap, right? Could be a trap. So I would be cautiously, I mean, we're stuck in a range. We don't have confirmation. We would probably say, look, be cautious. I would actually I'd try looking for a short here, actually. With a tight stop above the high, right? So in case it does confirm with another candle higher, I can exit, flip, and get long. But I am actually, right, only because this it's kind of trappy. We're in this early the month. We haven't had non-farm payroll yet. This may be just the top of the range. Might give you a nice opportunity to short it back into the range. But if we get above 52, 55 on a continued basis, then the sky, there's there's nothing. I think JP Morgan Chase, who I don't trust with any of their price targets, but they actually might tell the truth this time, and they say we could hit 6,000, right? So still time to get on this train. But if they say, hey, it's going to 6,000, they're saying that to get you in the market so they can take your money. And then when you're in, then they'll run it back up, right? So watch out for the trap on gold. Real fast, S&P 500. I'll just go right there real quick. I'm going to go SPX 500. I'm going to use a CFD. Dealing continuous contracts. There's their flag, right? This is okay. This is great because this is last week's forecast, right? Last week's forecast. I said what we had a 1, 2, 3, 4, 5, and we have flag pattern, right? And then I had to go a lot higher, right? So, but we went to the top. We actually went to the top of the box, right? We actually went to the top of the box and dropped from the top of the box, right? So that was the 25th, right? And we dropped, right? So and we did not break out, but we stayed within the box. And we're making lower highs and lower lows. I'm bearish the S&P 500. Looking here, right? Our flag pattern didn't break us out. We in fact we just got up to the top, which is with all drawings, right? So we actually, let me take the expansion. We did this low, high, low. We went to the 100% expansion and dropped, right? That's a bearish Gartley right there. It looks bullish, right? A, B, C, but what? 1, 2, 3, 4, 5, right? So we can probably go down to 67.34. Let's look at the NQ NASDAQ. And monthly. Oh yeah, of course it's been going, but this is a parabolic run, and we had maybe a 2-month decline here. This is just getting started. Still an indecision doji. We topped out about 26,351. Weekly chart. We're moving sideways in a channel. Again, that sideways channel again. And we're stuck in a box. And we're below our moving averages. We could actually see a pullback. Probably not a really big one. I mean, we went to the 23% retracement. 38% retracement was 22,614. The uptrend is still in effect. We just haven't made a new high. We haven't made a new low. Sideways consolidation. If we break above 26,53 or 20, sorry, yeah, 26,634. If we can get above that, then there's more to run. And typically March is positive for the markets. Okay, typically market is positive. The first week we might get a little bit of a pullback, but I would look to buy any pullbacks. Right? I don't think this is going to be a death knell. I think historically, the S&P 500, NASDAQ, and all those things, they do very well in March. So we usually see this the March move is usually pretty good, right? So February, historically, past over 70 years, been bad. March is usually about the same as January. January was good, and April is bombshell, right? April is better than November and December, usually, historically, right? So what's going on is expected, but the new month, look for March and April. So I wouldn't be a panicking. I wouldn't say, oh, wow, look, everything's going to fall apart. No, because if we go back in history, we go back to March. March usually we get rallies in March, right? Past performance is not an indication of future results, but remember what I said before: price has a memory. Okay, so yeah, so that was it. Our gold silver is another a big story. It is rocketing up 4%, right? It's diverging from paper gold 92.54. We're almost back at the about 100 after the pullback. We got as low as 64, and we're up at 93 on silver. And they're saying silver could go much higher. Silver gold ratio gets back to its historic 8-to-1 ratio. We're looking at $400 silver, right? So that's that. Okay, guys, I know we went a little long today. I hope that was helpful. And, we're going to be launching a challenge soon on Teams. Not Teams. No, it's going to be on, on School. Make sure you visit our School community to find out more about that. We're going to be doing a special challenge, a risk management challenge to take to grow a small account consistently. Okay, I'll leave it at that. And so if you want more information on that, check us out over in School. Also, check out our YouTube. We have some YouTube shorts on that are you'll find very interesting. So come over to our YouTube channel and make sure you like and subscribe there as well. In fact, and I'm very proud of my daughter has edited some wonderful videos, YouTube shorts on this is one short here.
Welcome back to the series, The Parable of the Talents in Matthew 25.
Talk about the parable of the
verses 14 through 30.
Oh,
it teaches another powerful lesson.
Yeah.
Don't let fear hold you back. The third
Check it
servant
out.
was so
Sorry.
afraid of losing what he had that he buried it.
Okay, I'm going to mute that and stop sharing. Right. So I just want to get that link out there to you. Check out the Parable of the Talents and like that video. Show you basically how Pip and Roy got started. Okay. I'll talk to you later. Peace and pips. Cheers. And I'll be in Texas tomorrow. So if you are in the Austin area or the Houston area, reach out to me on the social media and let's meet up for coffee. See ya.